Ladies and gentlemen, Greg McCloskey with a Kickstart video for April 25th, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. The data dump at 8:30 was less than helpful for the markets today. The GDP came in weaker than expected, but the inflation numbers were higher than expectations. That does not bode well for the core PCE price index to be released tomorrow in the U.S. That core PCE measure happens to be the favored Fed measure of inflation. And if it rises, that's not going to be good for the markets. The stock market is trading sharply lower in trading this morning ahead of the opening. The U.S. yields are also moving higher, with the 10-year yield now up 7.1 basis points. The S&P index, by the way, is down 64 points in pre-market trading. So things are getting hit in the stocks and bond markets. We're seeing the US dollar move higher after moving lower after the initial GDP, which was weaker than expected, caused the dollar to move lower. But then markets looked at the inflation numbers and said, whoops, fast break the other way. So taking a look at the euro versus US dollar, we're looking at the 4-hour chart. This spike to the upside here off of the initial report. Took the price above and through the 100 bar moving average of the 4-hour chart toward the 50% retracement level of the April trading range, but that was again quickly reversed, and the price has since moved back below the broken 38.2% retracement at 1.0709, and also below the low price going back to February. This is a low for the year before the price fell below that level a few weeks ago in trading and tried to stay below that level. As in this week's trading, we traded above and below before moving to the upside. So we're back below that level as well at 1.0694. The resistance level would now be back at the 38.2% retracement at 1.0709. If the sellers in the euro, the buyers in the US dollar are to continue on the downside, we have this swing area down between 1.0655 and 1.0665 as the next key target on the downside to get to and through. On the the low price that we saw earlier this or after breaking above that level, the low price in trading yesterday came ahead of the 75 level before moving to the upside. I should say it's 75, not 65. So getting below this area right through here would open the door for the downside for the euro versus US dollar. So right now resistance at 1.0709 if the sellers are to remain more in control. Let's take a look at the dollar versus yen. And this currency pair was also faked out a little bit off the GDP number. The price moved down initially off of the 1.7 GDP, then rose off of the inflation part of it. And we are back up testing the high price from earlier today. This is the hourly chart, 155.73. Once again, the price had moved higher in trading here today, taking the price to new 30 or highest levels since 1990. So that's 33, 34 years ago. And that the market seems to be comfortable that the line in the sand that at 155 is no longer in play. We saw that manifest itself in yesterday's trade, with the initial move above that level failing, but the second move to the upside taking the price higher. And today we continued that move to the upside. Of course, we have the Bank of Japan interest rate decision in the new day tomorrow, which could have an impact on that. But the Bank of Japan would have to be very hawkish to move the price to the downside. We are running away from its 100-hour moving average. It's a blue line in this chart on the moves yesterday and today. It would need a break below the 100-hour moving average at 154.89 and moving higher to give the sellers some confidence that the upside may have reached its peak. But as I said, we are currently, a pretty decent ways away from that level, but be aware, be prepared. That would be the target level to get to and through if the sellers again are to take more control. Finally, let's take a look at the sterling versus US dollar. This currency pair again moved higher after the data and moved above the 100 bar moving average of the 4-hour chart, but has since rotated back to the downside. We are back below the 50% midpoint of the April move to the downside. That 50% comes in at 1.25035, and the price is currently trading near 1.2482 at the moment. So stay below the 50% midpoint would be more bearish. That level roughly corresponds with this high price here, this corrective high price off of this low right through here. That level comes in at 124.98. Let's call it 125. So be aware of that on the downside. The broken 38.2% retracement at 1.2455 is the next key target, followed by the 200 bar moving average on the 4-hour chart at 1.24294. So there you have it, a technical look at 3 of the major currency pairs after the data dump this morning. Higher inflation, higher yields, lower stock prices. It's not going to be a good day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.